It all started back in 2013.
Data wants to be free.
Let's call bullshit on people who are bullshitting us as well, and that's how we're going to build the future of finance, all of us together, and that's how we're going to move forward.
Sounds good to me.
There's something magical about the Crypto Valley.
You create money more than any kind of central banks doing.
Blockchain will revolutionize trust on a global scale.
You can feel the entrepreneurial spirit everywhere.
This is Crypto Valley Visionaries Podcast.
Crypto Valley Visionaries.
Welcome to Crypto Valley Visionaries Podcast. This is your host Ivana here, and together with my co-host Ralph, in this podcast, we interview entrepreneurs and visionaries from the global blockchain scene. Together, we explore how blockchain technology is changing the world, and we discuss different stories from their entrepreneurial journey. Today, we get to sit down with Daniel Haudenschild, the founder and CEO of SIBEX, peer-to-peer OTC platform which enables trades directly between Bitcoin and ETH ERC20 tokens. Daniel is also the president of Crypto Valley Association and has behind him over 16 years of corporate career as a CEO and partner in a well-known consulting firm. In this episode, we talk with Daniel about the most valuable learnings from his corporate career that helped him build his startup. We talk about the importance of having a mentor and the challenges of remote work. If you haven't done so yet, subscribe to our podcast and follow us on social media. Now, sit back, relax, and enjoy this episode.
It was a lot of fun. I think it went by really quickly, and it didn't expect it to. People can expect. I left Big Four partnership to join blockchain organization, found a blockchain company, and left that blockchain company to found another even more kind of a niche cryptocurrency trading company in the DeFi space. So people can understand at what point in time, should I be looking at my current career path and thinking, do I want to start a company or do I want to get into that? And at least for me, there were some things that are absolutely important to figure out. And also the people I've talked to, what they kind of say, this is your top 5 things that you need to get out there and to go do it, and make sure you have those and you have a better chance of being successful.
Well, Daniel, welcome to Crypto Valley Visionary Podcast. You were in consulting, then you went into solution design and delivery, and then you were a partner in a Big Four consulting company, basically. That's very different from being an entrepreneur. So when did you first know that you wanted to become an entrepreneur?
Yeah, thanks for having me. It's really exciting to be here. I think I was always, I think always. I was in high school, I think, when I first went to the bank to ask for a loan to make a t-shirt design company, and I didn't, they didn't give it to me, but they did explain to me what loans were, right? And so, and why they weren't going to give me one. That's and then as when you're working up a Big Four consulting ladder to become partner, you ultimately, partners have to be continually looking at the market offering of the Big Four and then finding a business niche for it. So you do run at least a human resource model based company within a partnership where you have 20, 30, 40 people that are under you that need to hit certain profitability levels. And I think the big switch for me was to get out of a human resource-based model and into a solutions and transaction-based models, ultimately. That's probably much more the challenge than to move from staffing arrangements, which is all kind of much of a muchness.
All right, interesting. So, you climbed the ladder, then at some point you decide, okay, here's blockchain, I want to get into it. You took Swisscom into it, or Swisscom took you with you, into blockchain. How did Swisscom enter, and why? Why did Swisscom enter at the time?
So I was in global banking. So I was in London for 10 years working at Morgan Stanley and Deutsche Bank and Barclays Capital and the insurance companies like Catlin and some of the other bigger names. And that once you understand how much of our global infrastructure is based on Microsoft Excel or something like that, then I knew that ultimately I came to Zurich in 2014, got into Bitcoin and blockchain. And then I knew I couldn't go back. I couldn't go back to that world. And so we tried to do what we could within Ernst & Young, which was difficult. And then at the summer we had actually a partnership with Ernst & Young and Digital Switzerland, and we won a prize for Handelsregister on blockchain, and that's kind of the inception. And then Swisscom was looking for somebody to make a brand in a service offering for all the infrastructure that they were carrying in Switzerland and blockchain. Having seen that ultimately these roads will come together, trust and Swiss data centers and GDPR, there was sort of this perfect storm brewing for what could be a very interesting service offering to the corporates and to the banks. That Swisscom has a lot of customers that do that. So, and then it was in that space that we started talking about digital asset custody solutions, multi-sig, hardware wallets. What should the offering look like? What's best practice look like, what's leading standard, and so forth. So I think Swisscom was going to go in that direction anyway, and so the digital business unit picked it up, and we're looking for somebody to lead it. And I was at the same time within Ernst & Young, looking to do more than I could do within the confines of a Big Four audit firm.
And how did you get into blockchain personally? When was the first time that you faced this technology?
I was living in Zug, and my wife came back, and we moved straight to Zug. My wife came back from Starbucks. She's like, there's a bunch of kids there, and you can't sit down anywhere, and there's laptops all over the place, and they got these weird things on it. And I'm like, okay. And then I went down there, and I started talking to people about Bitcoin. We were the first Big Four in the world to accept Bitcoin as cryptocurrency payment. So that was my project. We gave all of our employees within Ernst & Young a cryptocurrency wallet, and we put it at ATM in the lobby, right?
In the lobby, yes, in the lobby. Prominent place, actually, in Zurich,
place.
yes.
There was every once in a while the secretaries would get nervous because these 3 or 4 guys would come in with backpacks, and like one backpack would be filled with mobile phones, the other one would be filled with cash, and they would only go to the ATM and they would deposit thousands and thousands and thousands with one phone, and then they would switch phones and deposit more, and then they would walk out again, and they were just like, what's going on, you know? So yeah, it was interesting, you know. That was at the very beginning time. People thought it was crazy that Bitcoin could go to $1,000, and then it did, and you know, the rest is kind of history. So.
That's amazing. But you really worked hard on the institutional, side in order to get everything right on the Bitcoin side, right? I mean, you worked hard both on the infrastructure technical side within your team, is my understanding, right, and the legal side, right? So you invested a lot of time in order to make that happen.
Yeah, we kind of went with the assumption that we will be reined in from the legal perspective by the compliance armies that we had watching over us. And so our main focus was, what does good look like? What do people need? And how does that overlap with the infrastructure and the other service offerings of Swisscom, so that we wouldn't constantly be this thing on the back, but we could be a more integrated service offering. And then we also looked at the market and said, what's working right now? And when you look at the market, even at that time, it was clear that the financial services use cases were going to have a predominance for their return on investment than other use cases for blockchain. Even if the other use cases are good and legitimate and bona fide and have a business return, the adoption is going to come in the financial sector.
So then you move on. You started your own firm, Cybex. So maybe you can explain briefly what Cybex does, and let me explain.
So Cybex is a software company. We write a protocol. The protocol enables people to trade peer-to-peer on a decentralized network with Bitcoin and Ethereum and all ERC20 stablecoins. So what's that good for? Well, if it's peer-to-peer, that means it's non-custodial, which means you never actually have to send your stuff anywhere. And if it's peer-to-peer, it means you also don't have to give up your asset to do the trade. So what it's not is it's not as fast-moving as, let's say, a Kraken or a BitMEX. And it's also not aimed at the retail market. So what we're good at is large-scale block transactions for crypto assets. So if you wanted to buy 1,000 Bitcoins or 3,000 Bitcoins or 5,000 Bitcoins, then you quickly run out of spaces that you can go to without having to pay sort of a beginner's fee. And on Cybex, you can trade those volumes and almost completely discreetly and globally at very, very, very low cost.
Interesting. So you started Cybex. You have, and it's disclosed, it's public. You have some Chinese investors, Finbushi. and you have Swiss investors, SIX Group. These are very different types of investors. So how do you manage that? How do you deal with this cultural gap and also the level of conservatism, I guess, that you would find?
Yeah, it was interesting. We put term sheet and an investor agreement and a corporate articles of association for a U.S. venture capital, a Swiss institutional financial services company, and an Asian or Chinese blockchain venture capital company. And to get the term sheet aligned and the investor agreement aligned, it cost us quite a bit of time and energy and resources. I think, though, that ultimately the strength was based on the Swiss law and the trust, anyway, in the Swiss institutional, especially when a company like SIX is in the mix, then you tend to believe that things are done correctly. And they were, and there was a lot of lawyers involved to make sure that the correct measures were in place. I think so. Ultimately, we bridge the gap in that. I think that what Cybex is a decentralized platform. And so we don't have barriers to enter global markets. We don't have to build another data center or have another jurisdictional headquarters or a legal entity. And so there was always this international thing about it. We have operations in Hong Kong and did so since the first day. So without Fenbushi, there would be no Cybex. And without the SIX Group, then as a European anchor, there would also be no Cybex. So those were the poles. And now we're able to sort of puncture global liquidity bubbles that arise and that have an impact on prices, especially in the large block order space. And that's what we were created for. So we're a dark pool for crypto assets above a certain amount.
When when we briefly spoke before, you mentioned it was very interesting and tough to raise your first round. So you raised 1.8 million from these three investors. How did you experience that, and what really was the most challenging aspect of the race?
So I think the hardest part is the learning curve that you inevitably go up when you're moving to venture capital, and I think that this is something that a lot of the blockchain or crypto companies can find empathy with, because there was this time of magic internet money, and all you had to do was an ICO, and money would rain from containers in the sky, and it was a wonderful time. But the concept of a decentralized fundraise is non-existent anymore. We have a series of securities issuances which are sort of waiting with the landing lights on, hovering until we have secondary market rules put around them. So the guys who've been sitting back have been the VCs. And they've been sitting there going, I knew you'd need us at some point in time. So finally, the crypto blockchain people had to kind of crawl back to the VCs. And so let's talk about equity. And then at that point in time, you realize that the blockchain crypto people don't really have a roadmap. They don't have the instructions. They don't have the skill sets to be successful when negotiating around venture capital. And this is bad for the venture capital, and it's bad for the entrepreneurs, because other than a select few that have been through the proper incubation programs, it's very challenging to know how much equity to give up for how much money to give you how much of a runway to get where. If you don't know that, and you overshoot by 6 months, you undershoot by 6 months, you find yourself in a raise that's between the norms of the funding rounds. So angel, seed, Series A, Series B, and that's challenging for startups, because then they, or they give away too much equity in the seed round, and then have very bad numbers when it comes to the Series A, where the founders aren't motivated anymore because it's dropped below 50%, and then they have a contagion from that side, or they don't know what to price their round on, right? What point in time should we stop building and look up? So I think that going through that learning curve was, for me, some of the hardest experience. And I think that unfortunately, it's difficult because there's not very many mentors and guides that you can choose from. The list is relatively small because most of the people you have to be talking to are investors of some sort. Yeah.
Take into consideration your successful corporate career, and then you made the move into startup world and startup scene. So I want to know, when did you first realize and said, okay, now it's the time, I want to create my own company? And how did you get into this business exactly?
I think that you have motivation is the number one aspect of things that you do. I think that for me I knew that I could stay in a situation where I would be perpetuating a reality that I didn't enjoy, which is. And I could continue to sell services in that space, and I could continue to make business in that space. However, I wouldn't be moving the peg anywhere. And I think that at some point I said, okay, well, it has to be done. Because if it's not done, I won't be true to myself, and then it was super easy because then you just start looking in a different way. You start looking at the world in different eyes. At that point in time, the suggestion is, of course, to stay at your current employer for the maximum length of time until you have your next step accounted for, at least financially. Because if you don't, you're going to be lurching into a void, and then all that learning experience about going up the curve is going to be funded by yourself and your family and friends around, which isn't too healthy. So I think that it's good that we're working in an entrepreneurial company like Ernst & Young, where I was always constantly mixing with people who had the potential. And then when I had the inventory full of what I needed to bake the cake, I would then look for the kitchen and the ingredients and start. But I think that waiting and spotting the right opportunity has to be matched with the motivation. You can't just say, okay, I'm going to be entrepreneur now. Now what? Right? You have to have something that's well aligned with your experience that you can do for a long time without any kind of reward if you spend 18 hours a day at it, and it has to be aligned with your motivation, and it has to be able to make money and get out there, right? Or you have to be funded through some other measure. But if it doesn't include all of those, then probably don't bother trying yet and wait. That doesn't have to say that you're not going to do it, but it's good to have at least a really good idea of a checklist and make sure it's filled, and and the due diligence on the components have been done.
Previously, you've been in leadership position in EY, and now you're CEO of your company. So I wonder, how did your corporate experience prepare you for the startup experience, and what is the difference between being CEO in corporate world and being CEO of a startup?
It didn't prepare me at all. And I realize now that as a CEO of a startup, I'm the guy who gets to put my hand up when something goes wrong and explain it to the shareholders and the investors. And I don't actually have control over anybody doing anything else. So I get staffed with all of the secretarial, administrative, and corporate actions. But as far as having executive control, it's more of sort of horizontal agency. But on the other side, that a lot of the stuff that I had to bring to the table in the other jobs, such as motivation and the other things, that they don't have to come. And the trade-off is amazing, because I work with a team of people that are out to change the world. And if that's your motivation, then there's really no stopping you. So now what I try to do is, instead of saying, okay, your performance reviews at the end of the year and you haven't made your numbers and therefore you're not going to get your promotion and you're number 5, you'll never make senior manager, maybe it's time to focus somewhere else. That kind of nonsense is cut from my job. And all I can do, or what I can do best, is to say, look, I had a situation like this a little while back. It was kind of different players, but ultimately this was my experience. I wouldn't go down that path. Let's try something else, and also keep people focused on the market, and keep focused on the customers, and make sure that our main indicators are healthy. So it's much more of a 1,000 nudges type approach than it is a top-down organizational structure, which you could have at another place. And in a startup, it's much more, how to harness capacity of a very good team and make them work as a team and deliver together for one goal.
And do you have any advice on how to choose the right team? Because we know how important it is to hire the right people, especially at the beginning of a company. So how did you choose your partners, and how did you choose the rest of your team? What were the skills, the values that you were looking for?
We're equally balanced between business development and tech dev. And technical deployment and development. So I think that you can spend a lot of time in technology being very busy and very productive and feeling like you're getting a lot done and not getting done what you need to make the product successful on a market. And on the other side, if it's just business development, then it's hype and there's nothing behind it and it fails too. So ultimately, you need to find the balance between the two. We were very fortunate to find a group of engineers that we had all worked together before. So we all had mutual respect of our skill sets, and that leveled the playing field immensely because we knew what the other candidate, what the other people and the other founders were capable of, and had demonstrated before. So that trust is something I wouldn't go into a relationship without that trust ever in a business sense, so if you spend a lot of time talking about who owns what and what percentage is fair, then you're probably not with the right team of people. And certainly I think it's also important to look for people who've done it before. Nobody's successful in their first venture. It's just not, it doesn't happen very often. So people have to, gone too close to the light a couple times, clip the wing, but still be fascinated by the glow, and to try again. And that's super important too, because then you can feed off each other's experience. So
your startup is in Switzerland. Yes. So you mentioned before that was an advantage when negotiating with shareholders and the corporate structures, and of course corporate law is well known and this benefits many large corporations. But so we have the Crypto Valley here. You have to think about who you bring and who you hire here. I mean, you have obviously a distributed team, so maybe you can comment about your experience, how it is to build a team here partially, and and working with people abroad.
So I don't think that there's or if there is a better environment for crypto financial services than Switzerland, I haven't seen it. And I've been to Hong Kong, been to Singapore, been everywhere. The interest you have of Switzerland to be a legislative home jurisdictionally for crypto and financial services in crypto is unparalleled. It goes right to the top. I think it's very clear for the people here that this is something that Switzerland has to do in order to keep its competitiveness in financial services. And that includes blockchain in broader spectrum, but financial and crypto and digital assets in a more narrow spectrum. So, that is because the government is so open and because they're active proactively to come up with the ICO regulations, the typification, the new fintech sandbox laws, all of the things that FINMA has done to prepare that path. That's groundbreaking and makes it super nice, in addition to the quality of your life things and the other benefits of working in Switzerland. However, it's very expensive. And it's done right, and it's there's no discussion of that you're getting quality for what you're investing. However, to have a high-profile team in Switzerland is a challenge. So we have operations in Hong Kong because 70 to 80% of crypto trading happens in Asia, and Hong Kong is the center of it all. So we had to have those operations there. Of course, it's a completely different labor market. So anything that we can work on with administrative, sales support, business development, compliance that we can put into Asia, we do. We were the only Swiss fintech investment in Hong Kong last year. So Hong Kong Invest is a good friend of ours. We actually, it's been pretty rocky in Hong Kong with the riots and then the virus, and now the virus and the riots. To be honest, you don't feel it very much. It's sensationalized a lot in the press. We have not lost a day of business in Hong Kong because of the riots, let's say. I think there's an emotional tie. It's a very difficult problem to solve over there. I don't think it's understood well by the press and by what gets communicated. It's very difficult because you have a lot of macroeconomic situations in Hong Kong in particular. So to do business in Hong Kong is still a hub for us to reach to all of Asia. And because we have the labor effect of having mainland China nearby, we have the potential to get PhDs in mathematics and that are extremely good, at a price point that really keeps our system safe and running, and it's something we couldn't afford to do here in Europe or certainly not in Switzerland. So that's how we've divided ourselves, and so we stay with the 4 founders as being the principal core team, to business development, to technical development, and then we look at features that come around that our customers want, and an order type, for example, that works slightly different, an API integration to an MPC wallet, and then we take this work component and we put it into our scheduling tools, and we say who's the best that we think should be working on this. We contact those teams, and then we ask them if they'd like to develop this for us, and then we tell them what we're willing to pay for it, and then we take the best ones of those proposals that come back, and then people get paid when they finish components of work that end up increasing our customer experience. So you don't get a grant to finish something until it lands, right?
And how do you choose with what kind of companies you're working? So other startups that are looking for doing the same outsourcing or hiring teams abroad, what should they look for?
I don't even want to say this because it's going to kill my inbox on LinkedIn, but people contact us over LinkedIn and then they give us stuff. But if you do, then send your GitLab and show us your work, because if you can't code and you've never coded, and if you're just would get the team together, then it's not interesting, right? We code in Golang. It's not an easy language to understand. It requires a couple of years of experience in programming before you're probably in that space. And then to do it in blockchain as well, you need to understand Bitcoin blockchain and the Ethereum blockchain really well. So, but people have been successful getting in touch with us with a CV and a great GitLab repository. And you always need different things, right? You need a UX developer one day, and you need a backend developer another day. And we've got this internal core that our engineering department takes place, and that's actually the Cybex daemon and protocol. But we have a lot of other things that we need to make the thing work and market ready. So a lot of the other things you don't need to have the PhD in mathematics or cryptology working on. You can have just a nice designer or something like that. So when we get to those components, we're much more likely to find a price-effective way that we can get a feature available to our customers.
So as we already mentioned that you were a partner in EY and CEO in Swisscom Blockchain, and now you're a CEO of your startup. What can you tell us about leadership?
Well, I think the best leadership is the kind that you don't have to really do or enforce. I think that there's kind of my first job ever. When I was 13, I was packing groceries at Star Market, right? The leadership that I had there, they just told me what to do and what not to do. But I was 13, I had no clue. I was really stupid, and it was hard not to put the milk on top of the eggs and stuff, right? And then you kind of have, so it depends on what the function is that you need to do. I think in my position at Ernst & Young, leadership often came with sales and acquiring projects. If you've identified a customer in need and you've explained it in a project and the customer has bought that project, then you've done a lot to shape what the outcome is, what the milestones are, and what you need as a team to develop it. So the objectives are relatively clear, but it's a human resource-driven equation where you try to balance the load of a few very knowledgeable professionals with many juniors who learn along and charge rates, right? So that's interesting because it's the type of model that you're always kind of deflecting the customer from asking too many questions to the most inexperienced staff, and you try to position one of the senior people quickly to deflect any conversations so the customer doesn't quite catch on how many people are actually burning cash at his organization trying to solve a problem. So that's the leadership in that space is a lot more about customer management, because the mechanism in the background for these consulting companies and Big Four equations that already exists to keep the staff, to keep the pyramids, to do the performance reviews and all the other things. Those mechanisms are almost as old as time is. And now in the startup space, I think the best thing that I can do is provide, experience from things I've done, things I've seen, things I've come across that worked or didn't work, and for what reason, and try to make sure that all of my experience is reflected in the behaviors of the team, so we don't make any mistakes twice, and at least not ones we could have foreseen. And I think that leadership is also just around the constant focus on the market. I think especially in crypto, it's so easy to try to tech your way out of a problem. Build more tech. We're not getting, what we need. Build more tech. Well, what if we had this feature? And then you get into this tech thing, and then you realize that wasn't it, but you've just lost 6 months and a couple $100,000 to build it. And they're like, okay, well, let's try something else. And then you go away for 6 months again, and you do tech after tech after tech deployment until you fume out, and then your VC fund's gone, and you're trying to figure out what happened. So getting people to realize that whiteboarding is great, solutioning is great, coming up with proposals is great, looking at a timeline, spending the money, all has to be driven by one thing, and that is, what is your value added to a market segment, and how are you increasing your market segment in that space? If you don't have that constant pressure of earning revenues and making money, many startups die on the altruistic altar of we're trying to change the world without having a return on investment for shareholders.
And can you give us a couple of examples where your corporate expertise really helped your current company? So maybe you had some difficulties that you managed to overcome because of your previous experience.
Sure. So what we're good at is, of course, the corporate segment. In Ernst & Young, we sold to global financial services companies day in and day out. So understanding the global financial framework and how it hangs together, especially when it comes to balance payments and international payments. So what is the SWIFT protocol? How does it work together with IBAN? What are clearing settlement times and timeframes? What are what's an e-money license? How does it work with the Swiss licenses? How does that help you do business in Europe? How do you hedge volatility against for crypto assets using standardized instruments so that you don't have exposure when you're transacting in larger volumes? Those are all things, I think, but probably the number one is understanding the way that the corporate banks think. And through the Swisscom blockchain experience, also how the corporate institutional early adopters are looking at the market and having the ability to talk and communicate to both on a level that they understand. I think that's probably what my value added is.
So now maybe sticking with that institutional framework, so Cybex is obviously catering to very large to people with very large trading blocks. So that makes us optimistic that this institutional adoption and this institutional pickup, so to speak, on the business side is really happening. Is it really happening?
For sure. I think what you can look at in the Swiss marketplace, Switzerland's got a $4 trillion wealth and asset management market. The backdrop right now is negative interest rates. The family offices are struggling to convince their customers why they should be paying minus 1.2 or higher interest. If you have $100 million in cash or cash equivalent assets, that's painful. If you look at other asset classes now, you would struggle to find something that has a continued return, especially after coronavirus. I think it's the reevaluation of everything everywhere. Like for obvious reasons, you wouldn't maybe look at cruise ships right now, right? But maybe you would, right? There's some things are starting to crystallize. There's big business in distressed assets, clearly, and there also seems to be right now a very anti-U.S. sentiment in China and a very anti-Chinese sentiment in the U.S. I don't know how much it's tangible for U.S. investors or companies, but certainly Chinese have become nationalistic in where they allocate their money, and there's enough wealthy mid-class Chinese people that are looking at potentially not having U.S. dollar investments and not having investments in real estate and other properties or equities in the States. And then maybe they know they want to exit something, but they don't exactly know where they want to go. So Bitcoin seems to be a good waypoint. And again, in stable coins, you don't have negative interest rates. In USDC, there's almost no slippage. So this stablecoin onset seems to be a very interesting financial bridge. And then Switzerland's nicely in the middle of all of these places with nice relationships with everybody as a neutral financial center. So it starts adding up the direction.
Very good. Returning to, maybe you spoke about the how it compares to be a CEO of a startup and the corporate world. When you when you now hire individuals, to work with you, I mean, what are some of the traits that you're looking for? What is the most important? And it could be very specific to your company as well, because you have like a solid team of co-founders, so to speak.
Yeah, I think for me it's motivation. I think the number one thing has to be motivation. It is the one thing that I can't bring to the equation. If the person doesn't know, I think we're also a relatively young team, me not included. But the rest of the team is young, and I think that gives you the ability to have more commitment, more loyalty, more hours burned, and to then. Some of the expectations so of more senior staff. I struggle sometimes with companies that have a lot of advisors in a very senior positions because I would say that what you really need is a very small engine room with 3 or 4 pistons firing almost all the time to get something off the ground, and then if you have too much weight on the heavy lifting advisory side, it's questionable if you're getting the right advice or from people who really care. So you need to have, I think vesting is an interesting world, not in the stake of tokens and token vesting or equity shares, but are you vested to the cause? Right? Are you, there's this chicken and bacon, right? The chicken laid the eggs, right? It was not entirely invested to the cause. The pig was definitely for breakfast. I think that's what you got to look for. You got to look for, who's, if we're all in this and we're all in this together, who fumes out when we fume out and who kind of goes back to their day job. And this is only 20%. Those kind of situations are super dangerous. And then when you look around the team after you've cleared that up and asked some people to leave, then you have to say, okay, now who's passionate about this and why? Why are you passionate? And then if you can rely on the passion, then you can get rid of all of the other things that can happen, because there's going to be lots of other things like arguments amongst the founders and we should do this differently, and you need to be able to get rid of those things, and they might not always be easy discussions, but ultimately your passion has to be aligned, and if the underlying currents aren't there, then likely the driftwood on the surface isn't going to be right either. So
how is it to manage decentralized teams? Because you said that part of your team is abroad. So how do you stay on top of your things?
Yeah, that's a super interesting question, right? Because there's everybody with COVID-19 is saying there's whole working from home is not a problem, and everybody's made massive steps to work from home more often and have Zoom things and everything. We have discovered, even though we were always decentralized, that there's definite slippage if you work entirely from home. And it's very easy to understand, but it took us going through it to figure it out. And what happens is that you focus on a list of things that you need to say to your co-founders and individuals, and you put them on a list. And of course, you start with the most important, worst thing ever. And then you bottle all that up for a 1-hour call, where you all get on the phone, and then, or 2-hour call, doesn't matter how much time you spend on the calls, where you then just unleash kind of this roster of what's not working and why, and it begins to sound very accusatory very quickly, and it also is then multiplied by online persona that people inevitably get when they fail to meet face to face in physical contact. So you get this online persona, even with shaky Zoom video or whatever. It's not the same as having a chat around stuff, because the human nature of things is the small talk in the beginning, at the end, and during the day is important, and that acts like a deflator to this pressure pot that builds up. So what we found was, over the course of the 3 months, right, we had major blocks where we couldn't get consensus around the right answer for certain things that we needed to do, and then we had to work on how to get together and work through them in a face-to-face way. Now, thankfully, we weren't impacted that much, because we could by the time we needed to have those components, we could actually get back together again, and we always have somebody in Hong Kong, right? But we even if you have 2 people in Zurich and 1 in Zug or whatever, and you can't get together, it still develops even in that smallest space. It doesn't really matter if the degree of separation is 2 doors down or Hong Kong and Zug. It's the same behavior that builds up. So you just need to have this FaceTime. It's really important, right? And I don't know if many of the big companies that are now switching to sort of much more full, remote working scenarios have thought it through all the way. And I'm pretty sure that a lot of them are going to see a little bit of a loss of productivity because of it, especially some of the big banks. I can just imagine some of those projects might be adding a few months to delivery timelines.
What did this experience teach you now? How do you overcome this kind of, let's say, discussions or conflicts when you cannot come to a decision because of these reasons? What's the best way to approach it?
We've decided face-to-face quarterly strategy meetings are absolutely imperative for all the founders. We've decided to block away certain times where we have office times for at least as many of the people as we can. And then if we have 3 out of 4 plus 1 joining from video, it's much more effective because the dynamic isn't between polls or in but the dynamic happens largely in the room, and the sort of minority interest is reflected accurately in the video podcast. So the balance has to be still face to face, because then the misinterpretations of statements, it's amazing if you read a text and you read it with the emotions of being angry or sad or happy or what, you'll put that you'll sort of personify that into the person who sent it. And most of the time, if it's a startup, you're stressed, you have lack of sleep, and you're grumpy, right? So you get all these messages, and then you kind of text back, and you always think the other person is grumpy with you too, right? So then you realize that that's not actually the case. And there's no massive conspiracy theory, but there's legitimate views around why the other person is contradicting you. And then you say, okay, well, let's, and you get there right away face to face, because you're like, oh, okay, this isn't the devil I thought he was, but and then you can kind of dismantle that. And that I mean, it depends on how much of an influence that is ultimately based on the original founders team, because those are kind of some of the challenges you have to work through, is like differences of opinion about what should be done with the resources you have. But certainly you can see that those misconceptions of people's intentions get magnified in a remote only scenario.
It's probably true what you've just mentioned for a lot of these decentralized projects, right? I mean, let's face it, we've seen it, just producing code is not the same as solving business problems and listening to customers, right? So, which is what has haunted the space for the last probably 2 years for sure, because, we would think also as investors, it's an illusion to believe that you can just, sit far apart and just produce compatible code and then, think that the project will be successful. So.
Yeah, I would definitely share that view. I think the challenge is understanding the customer's need, not addressing the need with blockchain by any by do or die, but really understanding where you can add value and what you're trying to solve, and that goes down to fundamentals, and then trying to figure out okay, so even if you have something that you can solve a known problem, can you get out there and talk to the people to get it done? I think that's also, we've seen that we're very fortunate to have our technical team that's actually very eloquent in business language, but there's definitely a business language that some technical teams lack, and they try to augment it by bringing in a biz dev guy, and because the biz dev guy is seen as kind of an appendage, it then gets difficult for the biz dev guy to understand the tech people well enough to present the product. So yeah, we've seen that as well. I think that working backwards from the customer has a need, and then I think as an investor as well, I think that the important thing is the high moat. Technology is never going to be a high moat to investment. Not so much as, let's say, being a Swiss institutional player or being in Switzerland is, because tech can be copied. If it's working great, somebody else is going to be saying, that's nice, let's do it. And in China, that goes faster than you can possibly imagine. And So that's you look for the high moats. The high moats is the team. The high moats is the market integration. The high moats is the the people who have the business acumen to get the customers to buy the product and pay for it.
What are your biggest learnings from your entrepreneurial journey so far?
Yeah, so maybe it's a bit of a repetition of what we learned. So, but certainly, I would say understand your fundraising. Understand what an angel, what family and friends round is, what an angel series, what a seed series is, what a Series A is. Understand the expectations of equity and the KPIs that are associated with that. Right? And what at what point in time is revenue going to be important, and at what point, and how are you going to get there, and what are the investors going to be looking for you at different stages of the investment. I think that definitely clears up the one of the most mysterious kind of mechanisms. The second is you can't tech your way out of a hole. So don't try. Go back to the facts. Be brutally honest with yourself, and try to understand why things aren't working the way you think. Don't just take the best possible or plausible answer and then try to build a technical feature that you think went to that. But really kind of look through it and be honest. If you can't achieve something, then it's probably not the tech. It's probably something else. The third is most certainly ask for help. Find mentors, find advisors. It's hard to, because you don't want to say help. I feel so clueless sometimes, but if you don't, then you'll never find somebody who reaches out to you and say, okay, no problem, come on, let's look at this. And I think that's really important, because you have to have people that will give you an opinion, right? Without necessarily wanting anything from you. And that's not going to be your investors. It's not your shareholders. It might not be your co-founders. So having personal mentors and having industry mentors that can help you, and you can ask and you can go to, this has been incredibly useful for me. I think that's, find those people, talk to them. They're usually pretty open, especially now with coronavirus. You can get in front of anybody. You want to talk to Tyler Winklevoss, go for it. Because the guys are sitting around wondering what, they're not seeing on the venture front. So there's, you can talk to just about anybody now. It's kind of an interesting side effect of COVID-19.
It's interesting that you mentioned that people should go out there and find mentors, because we hear this more and more. So more people are saying, get a coach, get a mentor, you will succeed much faster, and so on. So how do you have a mentor, and how would you advise somebody to look for one?
I have a host of mentors, right? Going back to my EY days, going back to also the time in London and New York, working in financial services, also having worked in Asia and Africa. I think that it depends on what problem I'm facing. So I think it's more of a you kind of build up an inventory of a relationship of people that you can ask for help from, and who could probably ask you for help as well. And you do this over the lifespan of your career, and it kind of, I don't know, you have to then go through them and say, here's a bunch of friends. They're still going to be friends, but they probably won't help me too much in my professional career. And then you have here's a bunch of Ukrainian outsourcing shops that have contacted me in the last 2 days. And there's 450 of those, probably won't be helping too much in my career, right? Even though nothing against Ukrainian programming, but you get all these contacts from people that you think, okay, but then you have a select few people that you say, okay, here's a partner I knew at Ernst & Young, and he was always super dynamic, and he knew, let's say, the Amsterdam Benelux market like nobody I've ever known. So if I have any questions around what's going on there, this is the first guy I call. Or if it's Germany and you have questions around BaFin, then there's a couple other people, and so you build up this inventory of people that that you say like, okay, this is a Rolodex of people that are very, very helpful. And then you realize that when you get into fundraising and you get into venture capital, that kind of then grows, and there's only hundreds and thousands of ventures capitals that have successfully and continually invested in crypto companies, and so you get to know that circle quite well as well. And then sometimes you'll find that some of the people that are in the crypto space aren't companies at all, but they're just people. And that's really cool, right? And then you could talk to those guys and around what's really happening in Asia in this market with this product. Who's behind this movement? It seems really strange. What's going on in the mining community? So that's how I've kind of amassed it. But you have to be a little bit brutal and sort of ranking people. Even though this is a great guy, probably he's a friend more than an associate or somebody who can help you.
Daniel, so now you're president of the Crypto Valley Association. The space is maturing, right? So not only do you have banks, you have financial service providers that want to become banks that have been in crypto. You yourself are, in an area where you can see institutional adoption. What's the state of the association? How is it in Switzerland, and how optimistic are you for the space overall?
So we just had a board and chair meeting where we had all of the working groups come together with the board here in Zug, and it was actually a lot of energy in the room. It was really exciting because I think for a year or so we had been working on just getting the house in order again, getting the machine room up, getting some technology behind our systems of membership and association. We implemented Hivebright, which is a social media-based platform where people can communicate. And by some stroke of luck, we were able to get it live just before the coronavirus hit. And so the online participation in that platform has grown amazing in the past 3 months and has attracted corporate investors who are one of our sponsors of the Crypto Valley Association, like Mazur and Accenture and OKEX and Kraken, and some of the bigger names are coming back to be associated. Yep, Swissquote, and we have very successfully kind of gotten the Western chapter up and running very well, and so you have this and then we promoted with Zoom these online series which we kind of instantly shifted towards as the crisis hit, and a couple of them have been really fantastic. So one of them was 450 people, 60 different countries represented, talking about stablecoins, and you'd have Canada arguing with Argentina, back and forth about the benefits and so forth. So and of the people online, there was only about 10% that were from the Crypto Valley, and we kept those people. We kept the participation was almost at 100% for the entire hour, which is almost unheard of in these kind of events. So and we've done 4 more this month, and we had one around the halvening, and then we had one about financial markets. So we see this online series is really working, and it massively kind of puts the brand out there internationally. And the working groups come up with the content, and the content is then disseminated in these online series. And we have restarted a couple of the working groups so that the content is improved in some. So we had a restart of the enterprise working group, a restart of the investor working group, a restart of the startup working group, and also the education working group, working with now SEBA and SEBAversity. So it's really exciting. To see that there's a lot new energy on the board. There's a lot new energy in the working groups. A lot of the working groups have transitioned to new chairs, and there's a lot of things that people want to do over the next 6 to 12 months. And that in a year when we had to cancel the Crypto Valley conference, which is our one flagship event, I wouldn't have bet on it. I would not have bet on it if I was looking at the cards sort of February, where we would be at this point. But we've actually enjoyed a growth in membership and a growth in sponsorship. And I think it's all more and more clear why people would come to the CVA to be part of the network.
Can you elaborate on that? So why should people join Crypto Valley Association?
So I think that it's for thought leadership on specific topics that are of international consequence. So we try very much to focus on a very broad, we are non-for-profit. So we try not to push an agenda other than crypto adoption. And I think that separates us from a lot of different organizations. Obviously the Crypto Valley Venture Capital, CVC, and Crypto Valley is a for-profit enterprise. We also have a very large international reach. I think that separates us a little bit from the Swiss Blockchain Federation. That's more on a political level. So, most of our members are international, and certainly most of the events that we have an international flavor. And that's given us an ecosystem of about 8,000 people, where you don't have that Rolodex very often. You don't have that list of people. They're mostly serious. They've been around in crypto for a long time. And if you want to reach out to them, then you can do so by becoming a member. And it's only 100 francs. So it's very inexpensive to become a member and then share part of the benefits of membership.
And you also mentioned that people are excited about what's going to come in the next 6 to 12 months. So what are some of the activities that you're working on right now?
So we're revitalizing the startup working group, and we're looking to make sure that what the offering is something that's actually needed in the Swiss ecosystem. We've got Digital Switzerland, we've got incubators, we've got other things happening. We're definitely not going to be an investment house or an accelerator or anything like that. But I think that we feel that part of our job is to make sure that startups have everything they need to get funded. And we think that what we can do is we can bridge international connections that we have to Asian capital, to American capital, to companies that are in Switzerland. So we're trying to do that. So that's certainly one I'm excited about. I think then, the regulatory group is continually doing a lot of amazing things with Mattia running it as a board liaison for that group and his team, just making sure that there's, regulatory comparisons between different jurisdictions. There's a lot of stuff coming. I think people really look to us as a source for that information. We're working closely with the Swiss Bankers Federation and the Swiss institutions, but also comparing internationally what different jurisdictions can do. And when it comes to crypto trading or digital asset custody and things like that, then that's quite powerful. On the enterprise side of things, I think we're also looking to get more sort of institutional use cases into the focus, and hoping that some international outreach will broaden the horizon of some of the institutional adoption, though it's probably going to continue to be finance driven for a while.
Well, thank you very much, Daniel Haudenschild, for joining us, and we're looking forward to some of the next events of the Crypto Valley Association.
Fantastic. Yeah, thank you very much for being here. It was a lot of fun.
This was another episode of Crypto Valley Visionaries Podcast. Make sure to follow us when the mics are off on LinkedIn and Twitter at CV_labs, or visit our website at cvlabs.com.